Hello and welcome back to the Note, back in New York this week. Now, many people might find this a little offensive, but if anything, the market reaction to Friday night's appalling events in Paris was positive. In fact, the biggest event as far as the markets were concerned for the day was the Japanese economic data, which showed that despite Abenomics, Japan has lapsed back into recession. As we can show you here, that translated into quite a significant fall for the TOPIX index for other Japanese stocks and for some other Asian stock markets. But by the end of the day, you had seen European stock markets have a generally positive day. Even the French market itself was virtually flat. And then the S&P, after a very bad week last week, has recovered very substantially. You can see it's now almost back to being flat for the year. Now, the main reason for that, very clearly, as we can show you in this next chart, is oil. The oil price is still, as you can see, we're now almost exactly a year on from the shocking OPEC meeting in November of last year, which really convinced people that Saudi Arabia was not going to do anything to try to keep the price up. You can see that in the greater context of the last year, what has happened to the oil market today is nothing very special, but you did see a bounce back up in particularly in the West Texas Intermediate contract. Obviously, renewed angst in the Middle East, concerns over supply there will actually help the oil price. That's translated into a very significant rebound for energy stocks here in the US, and so you ended up with a net positive day on the back of an appalling geopolitical event. Whether that is a firm basis for the market to go forward is another matter, but for the time being, despite the great geopolitical shock, markets are unmoved, or if anything, slightly helped.